Many beginners dive into forex trading without knowing the rules for success. And this leads to many of them losing their hard-earned money and ended up being frustrated and leave the market. Before you could be successful in forex trading, you need to know the rules that involves, the rules that you need to follow. And when I'm talking about rules, I'm not talking about technical analysis, because technical analysis only contributes 10 to 15% to your profitability in forex markets. The technical analysis is actually part of the rules that I want to talk about here. So in this video, I will be revealing 5 proven rules that can help you to become a successful in forex market or as a forex trader. And this will help you to avoid the common pitfalls. And before I go into the details of the rules, I would like to let you know that these rules are proven. They are the rules that have been used by successful traders. And also for my many years of trading forex, I've been able to prove that these rules is actually working. So if you want to be successful in forex trading, you need to follow these rules strictly. So this is not just like any other rules, but this one comes with a different because of the examples and the walkthrough that I'm going to, attach to this. Now, what are these rules? The first rule of success that will make you to be, or profitable consistently in forex trading is to develop a solid trading plan. Develop a solid trading plan. You can't joke with this. If you want to be successful in forex trading, you need to follow this rule to the latter. You need to have a solid trading plan. Well, many traders enter the market without a solid plan. And this leads to them, making impulsive decisions and end up losing in the market. So if you have a trading plan and you are following them strictly, this will help eliminate a lot of losses, and it will eliminate a lot of impulsive decisions that you make. So you must have a trading plan. And what are these things that you need to put in your trading plan? Number 1 is your analysis. Remember, I told you that this rules is not all about technical analysis. That technical analysis is part of this rule. So the number 1 rule is the trading plan, and a clear trading plan must include your technical analysis, which will give you a clear trend direction. Remember, in forex trading, they said trend is your friend. The moment you fail at this level, you have failed the entire process. And like I said, I want to walk you through these rules. I'm not just going to give you the rules. I want to walk you through it. So knowing the trend direction is very key in forex trading. In fact, when you enter the forex market to analyze, the moment you don't understand the direction of the trend, the best thing is to leave that particular pair or that particular instrument and go to and look for the next one to trade. So knowing the trend is very, very important. So that must be part of your plan. If you don't know, if that one is not in your plan, then you don't have any goal. Then another thing you must plan for under our technical analysis or under your analysis is your key level. You must follow your key levels strictly. After the trend, you must know your key levels and you must follow them strictly. That is the key level for entry. The key levels are where you position yourself for entry. And another thing you need to follow, rules you need to follow in your technical analysis is the confirmations. You must, follow your confirmations strictly. You know your trend, you know your key levels for entry, and you know your confirmations. You must follow these 3 rules in your technical analysis, and they must be your plan, which you must follow in your technical analysis. The another thing that must be part of your rules is your entry strategy. That must be part of your trading plan, which is the first rule. Remember, we are talking about trading plan as number one rule that you must follow. So your entry strategies must be part of your trading plan. That is, what are the entry strategies you want to use? Is it SMC? Is it ICT? Is it price action, moving averages, and so on and so forth? You must have that one as part of your plan. Then your exit strategy must also be part of your plan. What are the exit strategies you want to use? Is it supply and demand or support and resistance? That is, when the price gets to supply, you exit, or the demand, you exit, or you get to a resistance, you exit, or support, you exit. Or do you want to use other blocks, RSI overbought or oversold, moving averages and all that? Those things must be part of your plan as your first rule. So all these things that I mentioned must be part of your plan: the technical analysis, your entry strategy, your exit strategy, and so on and so forth. They must be part of your plan. So the moment you go against this rule of not having a solid plan, you have missed it already. So this is very, very important. This is the first rule you must follow: developing a solid trading plan. Then number two rule that you must follow to be successful in forex market and making consistent profits is to protect your capital. You must protect your capital at all costs, and that is where risk management comes in. In fact, there is a man called Warren Buffett. Is one of the big guys in forex industry. In one of his interview, when they asked him what is the first rule or number one rules of forex trading, he said protect your risk. And they asked him what is the second rule that he always follow. He said the second rule that is always following in forex market or in stock market is fulfilling the first rule. And what is that first rule? Protect your risk. That means the first rule is protect your risk. The second rule is protect your risk. And how do you do this? You do this by putting the proper risk management in place. Without proper risk management, one bad trade can wipe out your gains, all the gains you have made for a whole month. One bad trade can wipe them out. So you need to use stop loss. These are the things you need to do in your risk management. Make sure you always have stop loss in place, okay, when you are trading. Ensure you always calculate your risk reward. Your risk reward ratio is very, very important. Okay, don't ever place a trade without knowing what you are risking and what you are making. If you are risking $1, are you making $2-3? If you are risking $1,000, are you making $2,000-3,000? But the moment you just jump into a trade without putting proper risk management, you jump into a trade, you are risking $1,000 to make $200. That is a bad risk management, and you have gone against the rule. If you continue to trade that way, you might not be able to, make it out of the forex market. So you must follow these rules of protecting your capital. When trade is running against you, you know when to get out. When it's working in your favor, then you know how to hold. So these are the rules that you must follow for you to be successful in forex trading. Protect your capital, putting stop losses, calculating your risk reward, and so on and so forth. A good risk management will save you a lot. The moment you go against this rule, you are in big trouble. So the number 3 rules that you must follow for you to be successful in forex markets and have consistent profits is for you to be disciplined and be patient. Forex market is going to teach you this. If you are not a disciplined person and you are not patient, you will learn by force. It's either you learn it by force or you go. Discipline and patience is very, very key. You don't rush into trades. When it comes to forex trading, you don't rush into trades. You must follow your plan. Wait for the right opportunities and stick to your plans. Don't go against your plans when it comes to forex trading. Stick to your plans always. Let the market come to you. Don't run after the market. Wait at your demand and supply level. If you're a demand and supply trader, your key levels, let me just put it that way. Wait at your key levels. Let the market come to your key levels before you strike. That is why I put that in as part of your trading plans at the beginning. You can't remember, you can go back to the beginning of this video to listen to that. Your key levels are very, very important. Let the market come to your key level before you strike. Do not run after the market. Don't run after the market. Wait, let the market come to you. The moment you begin to chase markets, you are already going against the rules, and market is going to bite you. So be patient, be disciplined, follow your rules, stick to your plans, and you will thank yourself for doing that. Then the fourth rule that you must follow for you to be successful in forex markets and make profit consistently is to manage your emotions. You need to manage your emotions very well when it comes to forex trading. Manage your emotion. Emotion is very important. Fear, FOMO, fear of missing out, overtrading, revenge trading. These are the things that you need to work against. The moment you allow all these ones to overrule you or to take over you, you have missed it already. So you must ensure that you manage your emotions. You don't break that rule in forex trading. If you break this particular rule, it will send you. Manage your emotions. Take away fear. That is, if you follow your plans, there won't be need for any fear. If you follow your trading plans and put proper risk management, there is nothing to fear about. And again, there won't be any fear of missing out. Losses are part of forex trading. When you lose in the forex market, stop revenge trading. Do not do revenge trading. This is what killed many people, many traders. Revenge trading. You don't do revenge trading when it comes to forex market. You must guide against these particular rules. And also, when you are making money, do not overtrade. Overtrading also kills. Don't overtrade. Know when to quit. Know when to stop trading. You have made some money, keep those money. Don't give it back to the market, because when you make money, market is ready to take that money back from you. And they do that through overtrading. It's when you have overtrading that you see what you're not supposed to see. Know when to quit. So if you're able to guide against this, your emotion, and you are not breaking your emotional rules, then you will be fine in the forex market. And the fifth rule that I'm going to talk about is education. Education. Now you have to keep learning. Forex markets are constantly evolving. And what worked yesterday might not work today. The market is dynamic. So you need to continue learning. Learn from the co-traders, learn from the market itself, read books, and so on and so forth. That is why a lot of traders use weekends, to do their learning, back testing, trade review, and so on and so forth. You need to continue educating yourself if you want to, be consistent in your profit making in forex markets. You can't joke with this. You need to continue learning. So if you are able to keep all these 5 rules that I've mentioned, that is, developing a solid trading plan, protecting your capital by following a good risk management, discipline yourself and be patient, let the market come to you, managing your emotions, okay, No revenge trading, no over trading, no FOMO, fear of missing out. And keep learning. Learn every day, learn every time. I assure you that you're going to be fine in forex trading. And this takes me to the tip that I promised to give at the beginning of this video. And for you can just summarize this rule by doing this particular thing I want to tell you now. And that thing is, after you have done your analysis, close your chart. The moment you do your analysis, you know where your key levels are, you know the trend, you know where your key levels are, where you want to enter the trade and all that. Just put alerts in all those places. Create alerts on your phones, on your emails. Create alert that when market gets to those key levels, your phone should alert you, the market should alert you. Then you walk away. So the moment you continue to glance at your system, that is when you be seeing what you're not supposed to see. Market is full of noise. If you continue to glance at your system, all those noise will enter your head and you will begin to make mistakes. You begin to see what you're not supposed to see. Market is full of noises. So avoid staring at system every time. If you're able to, work towards this, and I assure you that you're going to be fine. So if you found these rules helpful, make sure you hit the like button. Subscribe to my channel for more trading tips. And leave comments with your thoughts. What rule do you think is the most important for success in forex trading? Among all these rules, which one do you think is the best? I want you to leave that in your comments.